Why I'm not investing in the Uber stock? No way I'm investing in the Uber stock, and I will tell you why in this vlog. And also we will talk about the earnings and the growth story that potentially has some downturns, so stay tuned.
Wolf of Dubai.
So what's poppin'? You are here on Wolf of Dubai. If you're watching for the very first time, make sure to smash that subscribe button and also smash that like button for the YouTube algorithm to help this video to come to a bit more viewers that are interested in stocks and finance, because this is what we are talking here about every single day. I'm vlogging daily on this channel, so make sure, if you don't want to miss exactly this kind of things, subscribe. And if you are here for the second or the 59th time, thank you very much for coming for another video. Now today we are talking about why I personally would never, no way I'm investing now in Uber, and I will tell you a couple of things what will happen. But to go to the very basics, all right? So Uber is a fantastic, successful story, right? So they became, you know, the startup in San Francisco. They started, you know, by providing driver service via app when this, you know, Google Maps thing came up and, you know, smartphones came up. So they produced this app and there was no taxis in San Francisco. So they produced this solution to this problem and growth internationally so far. So unbelievable, guys. But you know, it's a growth company, right? So we all agree it's a growth company. So, you know, looking into the earnings and the latest statements, if it's a growth company and you are missing on the bookings, right? The bookings don't grow anymore and you don't make profit as a growth company. Well, what's happened here, right? So this is the question I'm asking myself and also Uber investors. But apparently, you know, the product, as I said, is fantastic, right? So we have to actually thank Uber and Uber investors for every single ride that they are financing, because in the end, they are not making any profit. So actually every ride that they are providing is paid by the shareholders and financiers of Uber. Now, but let's go first into the earnings. So, and the earnings are actually not starting that bad, I have to admit, right? So healthy ride-sharing earnings, right? The ride-sharing business is still the most important for Uber and it's still growing, you know, so it's quite interesting to see. Now, the CEO Dara said that the profitability for the company is actually, you know, just 2 years ahead. So you can almost touch it, you know, but I don't know if this is really, you know, just saying to make investors happy, to just, you know, seeing what happened with WeWork just recently, you know, while big investors like, you know, SoftBank saying, you know, they are a little bit, let's say, disappointed and even ashamed of the investments in WeWork and Uber, what happened with them and with the valuations and so on and so forth. So, you know, I think this was something like they have to put out there, you know, we're seeing 2 years out there, some way to profitability for this company. So, but let's take it as they say it. So in 2 years, we will be profitable with Uber, right? So loss per share is 68 cents, which is much less than the 80 cents expected by Wall Street. So this is also good news. And the revenue actually also came a little bit stronger with 3.81 billion versus 3.69 billion. So now you're saying, you know, hey Wolf, what's wrong with you? Why you don't like Uber, right? So let's go to the more bearish side of Uber. Okay, so if you are looking into Uber, you're seeing that they are still losing $1 billion per quarter. This is huge, guys. This is, you know, almost making 4 and losing still 1. That's like, you know, getting $4 and still spending $5, you know? So I don't know where is the magic here, and I know what you might say. You are saying like, hey, you are a Tesla investor. You know that, you know, there is, losing companies, or Amazon had the same story, but still, you know, the growth story seems to have, you know, quite difficulties and challenging, you know, because the most important thing, bookings are actually not growing anymore. So if you are a growth company and you're not making profit and not, you know, on the booking side, don't have more bookings, then what's the future of your company, right? So this is the question, and I think that's also why Uber moved into cost cutting, same what Tesla did. But Tesla is something different. If you are just diving into Tesla really quick, Tesla is actually producing more and more cars, record after record, you know, and all sold. So actually they're building more factories, so they're growing like crazy, and this is not what I can see in Uber. They are also, you know, having a guidance that they will actually lose more this year than expected, $250 million more, and to total almost $3 billion. Okay, so this is also a huge amount that this company is losing. And also, you know, there's a big question mark about regulation, especially in California. There is this question if Uber has to give the drivers, which are basically a kind of freelancers working on the platform, need to be having the same benefits like the normal employees of companies have. So this will be a big question mark, because if this will hit Uber, then this is a big cost factor, and I don't know what will happen then. And moreover, you know, when you will watch this video, the lockup period will end as well, so the first big shareholders can sell their stocks. So I'm very curious what will happen with this company in a couple of days towards the end of this week. But let's go into the final you know, summary and conclusion why the world think that, you know, Uber is no way an investment for us. Okay, so first of all, the regulatory risk. I think I told you enough about this, you know, with California to start with this regulation. If this comes true, you know, other states might follow and say, you know, we want to have the same, you know, and so on. I think that autonomous vehicles, what every car manufacturer on earth that, you know, thinking about the future is developing, and somehow with partnerships or by its own, will kill the ride-sharing business on the long term in 5 to 10 years. Because, you know, if Uber say, hey, we will be profitable in 2 years, they maybe do it in 3 or 4 years. By then, the autonomous vehicles will be already so far ahead that, you know, they are already will start competing with the Uber system. And, you know, we know that the driver is the most cost point for Uber, paying him, you know, and if they are same just driving around cars, you know, Tesla or other car manufacturer can, you know, offer the same service driving you around just for like a small fraction of the cost Uber can do it. All right, I believe that, you know, Uber, by trying to you know, diversify themselves, they are trying too much to go into different kind of application. Now the whole you know, universe is like transportation. Okay, they want to be the Amazon of transportation, but also Amazon started to be the number one in books, and then they moved to other items that they are selling and became number one. And if you're considering Amazon, they have 3 main points, and they are much longer in business than Uber's. They are still having only 3 main income streams. This is e-commerce, you know, this is AWS, the Amazon Web Service, and also now ad revenue. So they're building, you know, every bigger business one pillar after a couple of years or even decades, right? And Uber trying to push, you know, in all directions, in Uber Eats, in Uber ride sharing, in Uber Chopper, Uber Money, Uber, you know, Uber everything, right? So, and you know, if you are like in so many different industries, I believe you cannot be so specialized and a specialist always wins against a generalist. So this is my opinion, and that's why I think Uber is doing, you know, maybe not the smartest move to be so much diversified. I think they have much more potential in the ride sharing, you know, going more, you know, in depth into this business. Like, for example, imagine you can have, let's say, much less cost with the ride sharing while offering ads to be looked at, right? Imagine you are an Uber and the Uber is like 50% less if you watch ads during the ride. So you have your smartphone and the Uber ads, you know, will be displayed and you have to watch it. The camera see your face, detect your face if you're watching the ads, and you know, you're watching the ads, you know, and you know, have savings on the Uber share ride, and on the other side, you know, there's much more advertisers that, you know, will push money into the system while advertising directly on the smartphone for, you know, potential customers during an Uber ride. So, you know, there's this kind of things that, you know, people, visionaries can think of. So I think maybe this is would be the better way to go further for Uber. And also, you know, Uber shareholders locked up ends today. So I'm very exciting to see throughout the day how this further develops for the stock. So thank you very much for watching, and make sure to subscribe and thumb up this video, and see you tomorrow here at The Wolf.